Hello guys, welcome back to my YouTube channel. Compliments of 2024. So guys, I do hope and pray that you're gonna smash all your dreams this year. So what you need to do is look at the risk, calculate the risk, and then take the risk so that you don't regret later on. So today I'm going to be talking about top 10 tips that will help you navigate within the property landscape in South Africa, right? So we're going to start with number one. Research the market. Guys, I can't stress this one enough. You must research the market. Look at the property trend in terms of where we are at the moment. So what I will tell you at the moment, the property space isn't really doing good because the interest rate is too high. Those who bought properties that they could afford can no longer afford them because the bond repayment has changed. So let's say somebody was paying 8K for a two-bedroom house when they afforded it, but now because of the rise in interest rate, you'll find out that they're paying about 10K, which is above their budget. So at the moment, the property space is not really doing well, but you remember, you always have a constant demand of people who are looking for accommodation. So there are ways that you can still take advantage of how things are at the moment. Maybe you can tweak your strategy a bit. Instead of buying a property that will house or host a single family, you can buy a property that you can turn into a communal so that you can maximize your gains, right? And then the other thing is you need to keep on identifying the potential growth that are there within the areas and look at your high rental demands, right? And then the other thing that you can also keep an eye on is keep an eye on the economic indicators and government policies, because all of those have a direct impact and influence on the property trend, right? That's number one. Then number two, you must set clear goals, right? So you must define your goals. You must decide whether you want to be a long-term investor or a short-term investor. So I did do a video, I think a while back, on the difference between the two, but just in summary. So if you want to be a short-term investor, you can say, maybe I want to buy a property that is in distress so that you can rehab it and sell it, right? Flip it. Or you can say, no, I want to buy properties. I'm going to buy this one property first. I'm in it for the long term. I'm going to get people who are going to help me to pay my bond. They're going to rent the place so that I can pay off the bond. So you can do that, right? And then you can also determine your risk tolerances. I mean, it's not the same. Some people might say that they are large at taking risk, and some people will say I'm a bit conservative. So you look at yourself, how you are, and then don't just, for an example, if you qualify for a 5K bond, right? Don't take the entire 5K because you don't know what will happen in the next 5 years, in the next 3 years, right? So always try to leave a cap so that there's that room for you to move. So if you qualify for 5K, take 4, so that you know that even if the bond repayment can increase, you're still able to breathe and be able to commit to the bank, right? Okay, then the third one is financial planning. Guys, set up a budget and follow that budget. Don't just and spend anyhow, especially if you want to invest. You need to be really careful with your budget, and don't just buy houses because you want to impress. Don't just buy houses because you want a beautiful house, whereas you want to use that house for investment, because you can buy a beautiful house and then rent it out, and then you'll find out that person who's renting your house is not really taking good care of your property. So be careful and make sure that you are doing everything within your means and you follow your budget, right? And in your budget, you must also factor in additional costs like your property taxes, like your property levies, especially if your house is within a complex, right? So you need to also factor in and maintenance, guys. The house doesn't stay the same. It's, you stay in that house for 3 years and then all of a sudden it needs to be painted, the tap needs to be fixed, and this and this and this and this. So you should always factor those accounts or those costs within your budget, right? Okay, then the other one, location is key. Location is key. You look for a location that has enough traffic, because you don't want to buy a house and then you end up having that house vacant for the next 3 months, because that means that it's going to take from you without having to give you any muscle to use. You understand? And you don't want to buy a place where there's high crime and you find out everybody's just like pushing tenants away because the house is always broken into. You don't want topics like that. So you need to be really, really careful in terms of identifying your location. Go for your location that is closer to all amenities. Don't just go for a place that your tenants are going to struggle to get transport to work, struggle to get to a shopping mall, a shopping center, schools, and all those things. So look at that, right? Okay, then the fifth one is property type. Are you somebody who wants to invest in residential property or commercial property? Because some people will say, no, for me residential doesn't really cut it. I want to go for the big bucks. I want to go for the commercial. And then what you would need to do now is it ties up with the next point. Understand the legalities so that you don't get yourself into a contract that will end up suffocating you, that will end up taking from you. So understand even the legalities, familiarize yourself with the legal aspects of owning a commercial property, right? Okay, then you must also consult with professionals so that you can ensure compliance within all the regulations, because you'll find that some people, they will go and view a house and say, okay, I want to buy it. And then after they have signed the contract and say, no, I want you to, and call the owner and say, no, I want you to fix this, fix that. And the owner will tell you, look at the contract and say, full thoughts, meaning you buying it as it is. You can't tell us to upgrade it after you have signed the contract, because this is what we sold to you. So you really need to be careful and consult professionals so that you can make a good decision, right? Okay, then the other one is financing options. Are you somebody who's careful, or are you somebody who's more conservative, or somebody who can say, for me, I will save money maybe for the 5 years, then I will use that money as deposit, or I will buy the property cash? Or you can say, no, I'm going to go to a bank, get a loan so that I can pay back that money on a monthly basis. You decide which way you want to do, because if you are patient enough, I mean, for me, cash is key. Cash is king. So if you would save money and so that you can buy it cash, then that will be awesome, so that you don't owe the bank nothing. So if you own the property, and let's say you buy a property cash, that means that if the interest goes up, goes down, doesn't affect you because you have settled your debt. But if you went the via route, the traditional route of going through the bond, that means that you'll be affected by the spike within the interest rate, right? So be careful and really consider. Yeah, so it's all about trying to leverage your investment, but at the same time you must also be mindful of the risks that are there. Okay, then the other point, the eighth point, is you must network with professionals. Guys, always try to befriend real estate agents, because if you do, you can have that kind of a relationship that they can phone you for a property before they advertise it, and then they say, no, there's a property that is coming up in the market and it's really good. It would make sense for you to invest in it just before they advertise it. So you can be able to get that information beforehand if you befriend them. So always be closer to them, and you must seek advice from them, the other investors as well, the people who've been in this game for too long, because they understand a lot about how property is moving at the current moment. So please consult and take advice from them so that you can also accelerate your growth in terms of investing in property, right? Okay. Then the ninth point is do your due diligence. You must conduct thorough diligence on the property you're considering. You don't just go there and buy at a fly. Don't just go buy based on emotions. You must really look at the property, because I do hear of people who say, no, I bought this property, then I realized that this property was like a mess. I didn't see this, I didn't see that the wall was cracky, I didn't see this, I didn't see. So when you go into view a property, don't just be wowed by the speech that the sales agent is telling you. Yes, hear or whatever that is he or she is saying, but at the same time, pay attention to how the property really looks like. Test things, test the tab, test things when you get there, look under things, and so that you can make sure, because once you sign that contract, that's it. Once the bank deposits, once the bank releases the fund, then that's it. So be careful. Make sure that you really inspect the property, review relevant documents so that you don't buy a house that is attached to a lien, and then you'll be in trouble, Okay, and it's also advisable that when you're going to view a property, take somebody who's good in property, so that they can, especially if, or maybe what you can do the first viewing alone with the sales agent, and then if you're really considering set up a second one, then on the second one, bring somebody who's good at property, so that that person can help you inspect and look at all these nitty-gritty, so that you don't miss anything. There are no gaps, right? Because once you sign, that's it. Then the last one, you must stay informed, so you must keep yourself informed about the market trends, about the economic indicators I've highlighted, and the changes in the property laws and regulation. Always upskill yourself, keep your eyes and your ears open, and attend seminars so that you can attend seminars, workshops, and so that you can also upskill yourself and increase your network base with all other people who are versed in property investment. So guys, I also did an analysis of the channel, and I saw that a lot of people were coming to the channel because of talking about property. So I will leave the other stuff for other channels. I will stay in property investing. Peace out. Please do subscribe and share the video. Bye.